What are some pre-tax moves for high earners who do not have any access through work? So what this person is specifically referencing is what are some things that you can do if you don't have access to something like a 401k or a Roth 401k or a 403b at your work. And what you want to do is you want to get money into these pre-tax retirement accounts. The reason why is your money can grow faster because you're not paying taxes on money in certain levels. So there are some pre-tax moves that you can make for high earners specifically because they can't make certain moves in terms of investing in a Roth IRA or doing things of that nature. And we'll talk about actually how you can get your money into a Roth IRA here in a second. But what pre-tax moves can you actually make? So let's talk about a few of them. The first one, and the main one that I want you to look at first, is a health savings account if you qualify. Now, to qualify for a health savings account, you have to have a high deductible plan. But the health savings account is one of the best accounts that are out there. And if you have a high deductible health plan, it's a fantastic route for you to go in terms of saving for retirement because the money has triple tax benefits, meaning you put the money in tax-free. You can invest those dollars once the money is in that account. The money can grow tax-free, and you can pull the money out tax-free. So this is the incredible power of the HSA. You have those triple tax benefits. Now, the key to the HSA is you have to have a qualified medical expense. So making sure that you have qualified medical expenses and you're saving the receipts for those expenses over time means that you can draw down that money completely tax-free. Now, the IRS has no limit for the time horizon as to when you actually had that medical expense. So you could say break your leg when you're 21 and draw the money down from your HSA when you're 65 tax-free. It doesn't matter how long ago it happened. As long as you have a receipt for backup, it's going to be a fantastic way for you to do that. Now, I've talked about this a number of times. How do I track my receipts for HSAs? You can use tools like Dropbox or Google Drive or Microsoft OneDrive. There's a number of different cloud ways that you can do that. Just make a folder called receipts, throw all of your receipts in there, and you are good to go. Now, if you want to track it on a spreadsheet or something of that nature, that's something else that you can do. But this is an amazing way for you to be able to get those triple tax benefits. Now, the next way that you can do this is with a backdoor Roth IRA. So what a backdoor Roth IRA is it's a way for high earners, people who make over the income limits, which I will leave down in the show notes so you can check out the income limits. But if you make over the income limits of a Roth IRA, then you absolutely should be looking into doing a backdoor Roth IRA because it's one of the best ways for high earners to get their money into tax-advantaged accounts. Now, it is not pre-tax like this question asks, but the tax advantages are definitely there, and you can get large amounts into a Roth IRA by utilizing the backdoor Roth IRA. And the cool thing about the backdoor Roth IRA is there's something called a mega backdoor Roth IRA, which we're going to be talking about coming in the future, where you can get over $60,000 into the Roth IRA by utilizing the mega backdoor Roth IRA. So we'll talk about that in a future episode. Make sure you're subscribed to this podcast so you can hear that episode because that's going to be a very cool episode. And we're going to talk about a bunch of tax loopholes that you can utilize with that mega backdoor Roth IRA. So the way the backdoor Roth IRA works is you put your non-deductible contribution into a Roth IRA. Now, I like to put a contribution into an IRA and then wait for a little while. Some people say you only have to wait a couple of days. Other people say you have to wait for a year. Some of the best financial advisors that I've ever talked to have said wait at least a year so that it looks like an IRA contribution. Then what you do is you convert that IRA contribution to a Roth IRA contribution. So this is something that you can do, and anybody can do this. And if you are a high earner, then you can get those Roth contributions, so you can still contribute to a Roth IRA by utilizing this strategy. Now, you can also do this with SEP IRAs, with simple IRAs, with traditional IRAs. You can utilize all of these for the backdoor Roth IRA. So you have a ton of options when it comes to doing the backdoor Roth IRA. So make sure you look through your personal situation to see if you can do it. And the majority of folks can do it. They just don't know that it actually exists. Then the third option is to look at a traditional IRA. The problem with the traditional IRA is it does have some certain income limits and it has limitations as to what you can do for those pre-tax moves. But looking at that traditional IRA may be an option as well if you want to get some pre-tax money into traditional IRA. Just check out the income limits that we will have in the show notes so that you can make sure you understand exactly where those lie. At the time I'm recording this, if you make $66,000 or less, then you get all the pre-tax benefits. Or if you make $105,000 as a couple or less, then you get all the pre-tax benefits. So $66,000 if you're single and $105,000 if you're a couple. But for most high earners, this isn't going to be a good enough income limit for them. So make sure you're checking out your personal situation so you can figure that out. Now, one other thing I'll note, and obviously this isn't pre-tax as well, but if you look into real estate, there is a ton of tax benefits inside of real estate. If you need more tax benefits outside of what you're doing currently, you can look into a bunch of different real estate options. And it doesn't always have to be something where you're owning physical property and putting the sweat equity in. You can become a cash partner and have somebody else do the sweat equity. There's a lot of different options you can get into there. You could buy rental properties and have a property manager, but you're still having to manage that property manager. But thinking through some of these options may allow you to at least defer more taxes. Another way to do this is to buy boring businesses, and boring businesses will allow you to do the same exact thing, or any business whatsoever within your expertise, because you'll get those write-offs, you'll get those deductions, you'll get those tax benefits as well, and it's going to help you on your income statement come tax time. Thank you guys so much for watching this money Q&A video. If you guys have any questions or want to leave a question with me, hit me up on Instagram or TikTok at Master Money Co. And if you like this video, here's another Q&A video that I know you're going to love.